Almost one-third of all homes sold in the first half of 2025 were all-cash purchases. Think about that for a second. We're talking 32.8% of the market, according to research by Hannah Jones from October 2025. That's a massive slice of the pie being bought with no mortgage, no interest rates, no debt. But who are these buyers? Are they institutional investors scooping up everything? Are they wealthy individuals looking for a safe haven? Or is something else entirely driving this cash phenomenon? Because what that means for you, whether you're buying, selling, or just trying to understand this insane housing market, is absolutely critical right now. Let's dig into who's really behind the cash boom and what it truly tells us about where real estate is headed. All right, let's talk cash. Because if you're trying to buy a home right now, or maybe you're thinking about selling, the sheer volume of all cash offers out there is probably making your head spin. Just how many homes are actually selling for cold, hard cash, no lender involved? Well, according to Hannah Jones' research from October 7, 2025, a staggering 32.8% of all homes sold in the first half of this year were all-cash purchases. Think about that for a second. Over a third of the market isn't playing by the same rules as the rest of us. And it's not just some abstract number. In metros like Tampa, we've seen specific neighborhoods where cash buyers are dominating nearly 45% of transactions, often waiving appraisals and inspections, making it nearly impossible for a financed buyer to compete. This isn't just about wealthy individuals, either. We're talking about institutional investors, yes, but also a growing wave of foreign capital and even everyday folks pulling equity out of their existing, low-interest homes to snatch up something new. It's creating a two-tiered market that's more pronounced than anything we've seen since before the 2008 crash. Now, this isn't 2008. The underlying mechanics are different. We're not seeing subprime loans driving this. Instead, it's a confluence of high interest rates sidelining traditional buyers and an abundance of liquidity from those who don't need financing. So, what does this surge in cash really mean for the average buyer and seller? What does it tell us about where the market is headed, especially when you factor in declining inventory in places like Boise, even as days on market creep up slightly in Seattle? Stick around, because we're diving deep into the data, breaking down who these cash buyers really are and what their influence means for your piece of the housing puzzle. Of 2025, that's exactly what happened. We're talking 32.8% of the market being bought with no mortgage, no interest rates, no debt. Now, that roughly one-third figure, while a slight 0.6 percentage point decrease from the implied previous year, signifies a much more pronounced influence compared to our pre-pandemic average of 28%. Think about that. It's not just a blip, it's a sustained shift. An NMP article from December 13, 2025, by veteran housing analyst John M. Wieland corroborated this, stating all cash transactions accounted for nearly 30% of U.S. home sales, specifically highlighting the surge in high-value urban markets. Redfin data, as of August 2025, put that figure at 28.8% of U.S. homebuyers, with an even higher concentration in luxury segments, sometimes exceeding 40% in price points above $1 million. This share of cash buyers, consistently hovering around that 32% mark, is actually the highest level we've observed since the post-financial crisis peak of 2014, when the market was awash with institutional investors snapping up distressed assets. That's according to extensive research cited by market strategist Amanda Dodge on January 7, 2026, analyzing a decade of transaction data from multiple listing services. What does that tell you? It indicates a significant structural shift in market dynamics, favoring liquidity and speed. For instance, in a hyper-competitive market like Miami's South Beach, where an investor recently scooped up a triplex for $950,000 cash, they closed in 10 days, completely bypassing the weeks or even months of financed buyer, burdened by underwriting and appraisal processes, would need. This unparalleled speed and reduced financing risk are major attractions for these cash deals, often giving them an undeniable edge in multiple offer scenarios. This sustained dominance of equity-rich buyers creates a unique environment for sellers, and sometimes opens up specific opportunities for other types of buyers. But here's the kicker. and it goes beyond simply avoiding a monthly mortgage payment. A groundbreaking study from the UC San Diego Rady School of Management, published on April 2nd, 2024, by Christine Clark, revealed something truly significant. All-cash home buyers pay, on average, 10% less than buyers using a mortgage. Think about that for a second. We're not talking about a minor concession. That's tangible savings, potentially tens of thousands of dollars off the list price on a median-priced home. For instance, on a $500,000 property, that's a $50,000 discount directly in your pocket. Michael Rear, an assistant professor of finance at the Rady School and a co-author of the study alongside Professor John G. Matsusaka, explained this cash discount isn't a fluke or a statistical anomaly. It's directly tied to the convenience and certainty that cash offers provide sellers. Picture this. You're a seller in a competitive market like Austin, Texas, and you've got two offers on your property at 123 Main Street. One is from an all-cash buyer, like Sarah Chun, ready to close in a lightning-fast 10 to 14 days, with no appraisal contingency, no financing hurdles, and a clean title. The other is from a buyer with a mortgage, requiring a standard 45-day close, a lender-mandated appraisal that could come in low, and the ever-present risk of financing falling through at the last minute. Even if the mortgage offer is slightly higher on paper, say $5,000 more, that all-cash buyer looks a whole lot more appealing. That's the certainty sellers crave. They're willing to take a lower price to avoid the stress, the potential delays of up to several weeks, and the very real chance of the deal collapsing. It's about de-risking the entire transaction for them, minimizing carrying costs, and that's precisely why sellers love cash offers. It boils down to speed, simplicity, and rock-solid security. We're talking about a 10% discount on average, just for being a cash buyer. So why do sellers extend this kind of olive branch? It boils down to three things: speed, simplicity, and security. First, speed. According to the Open Door editorial team on May 18, 2026, a massive benefit of cash offers is eliminating the need for a mortgage. Think about it. No lender underwriting, no appraisal delays, no last-minute financial hurdles. That complex, often lengthy loan process is just gone. This drastically speeds up transactions. For a seller, especially if they're trying to close quickly to buy another home or relocate, that certainty is gold. Imagine a seller in Miami trying to offload their condo before a new job starts in Denver. A financed offer might take 45 to 60 days, fraught with potential issues. An all-cash offer? That could be 10 to 14 days. The June 6, 2024 article, The Truth About Cash Buyers, defines a cash offer precisely as purchasing a home without needing a mortgage, eliminating those contingencies and shortening the timeline. Second, simplicity. When you remove the lender from the equation, you strip away layers of paperwork and potential headaches. As the Open Door team also pointed out, it simplifies the entire home buying process. No mortgage, no loan approvals, no credit checks. For a seller, that means fewer moving parts and less stress. Finally, security. This is huge. The certainty of an all-cash offer significantly reduces the risk of a deal falling through due to financing issues. We've all heard stories about a mortgage application getting denied at the 11th hour, or an appraisal coming in low, completely derailing a sale. Sellers in any market, but especially in uncertain ones, often prioritize a guaranteed, quick close over a slightly higher offer that carries financing contingencies. They want that peace of mind. So who are these cash buyers? Beyond the stereotypes, there's a lot more going on beneath the surface. No appraisal delays, and fewer contingencies, leading to a much faster closing process. But the big question we need to unpack is, who exactly are these cash buyers? It's tempting to picture a high-rolling institutional investor, right? Maybe a PE firm scooping up properties in bulk. And while that's certainly part of the equation, the data from Hannah Jones' October 7, 2025 research suggests the reality is far more nuanced. When 32.8% of homes sold in the first half of 2025 are all cash, a figure that, even with a slight dip from 2024, is still significantly up from our pre-pandemic average of 28%. It tells us it's not just a few big players. This sustained presence, claiming roughly one-third of all home purchases, signifies a broader demographic at play. Think about it this way. The allure of saving that 10% on the purchase price, as highlighted by Christine Clark's April 2, 2024 UC San Diego study, isn't just for those swimming in liquid capital. It's a powerful incentive for older homeowners who are downsizing, perhaps from a larger family home in a place like suburban Dallas and looking to pay cash for a smaller, more manageable property in a less expensive market like San Antonio. Or maybe it's someone with a significant chunk of their net worth tied up in other assets, stocks, a business, even a prior investment property, who is incentivized to liquidate to capture that 10% cash discount. This isn't just about pure wealth. It's about strategic financial maneuvering to gain a competitive edge. This shift means the market isn't just being driven by mortgage rates anymore. The presence of these cash buyers has profound implications for the market and for mortgage shoppers, pushing us into a very different real estate environment. Now, let's zoom out to understand the broader implications for the market, especially if you're a mortgage shopper. With cash buyers consistently making up a significant portion of the market, Hannah Jones' research from October 7, 2025, showed that nearly 32.8% of homes sold in the first half of 2025 were all-cash purchases, and Redfin reported over 32% in 2024. This reduces the overall pool of homes available for finance buyers. This creates a tougher environment for everyone else, potentially increasing competition in that segment. Consider a scenario in Tampa. A seller gets two offers on a desirable property. One is from a financed buyer, pre-approved, but with the usual appraisal and financing contingencies. The other is from an all-cash buyer offering 5% below asking, but with no contingencies and a 10-day close. As Michael Rear, assistant professor of finance at the Rady School of Management and a co-author of that April 2, 2024, UC San Diego study, puts it, when sellers accept a mortgage offer, it comes with risk. That inherent risk with a mortgage offer often pushes sellers to lean towards the certainty and speed of cash, even if it means accepting a slightly lower nominal price. And that brings us to the most direct disadvantage for mortgage-dependent buyers: the cash discount. Christine Clark's research, also from the UC San Diego Rady School, highlighted that all cash buyers pay, on average, 10% less than those using mortgages. This isn't just about winning the bid. It means finance buyers are often forced to pay more for the exact same property, putting them at a direct disadvantage in price negotiations. To compete, you might need stronger offers, fewer contingencies, or higher earnest money, just to level the playing field against a cash offer that inherently carries less risk. This dynamic fundamentally shifts the landscape for anyone relying on traditional financing. At cash buyers, whether they're institutional or individual, fundamentally alter the competitive landscape. For sellers, cash remains king, offering a premium not just in price, but in certainty and speed. For those relying on traditional financing, it's a clear signal. You are competing on a different playing field, one where a significant portion of offers bypass the very hurdles your offer must clear. This isn't about blaming cash buyers. It's about understanding the mechanics that give them an inherent, data-backed advantage, especially as inventory constraints continue to plague markets like Tampa and Austin, even in early 2026. Have you ever lost out on a property because a cash offer swooped in, or perhaps you were a cash buyer yourself? Share your experience in the comments below. And if you want to stay ahead of these market shifts with data-driven insights and property analysis, make sure to hit that subscribe button. Next, you'll want to watch my deep dive into how rising insurance premiums and regulatory changes are impacting property valuations in coastal markets. It's a silent, underlying mechanic that's going to reshape cash flow for years to come.